Records stumbled on the lal streak through the week, but a sharp fall on Friday saw the market snap its 8-day winning streak. Despite this, the markets posted gains for the week. On this week's edition of Editor's Roundtable, we put the spotlight on what to expect from the earnings season. We take stock of the Eicher Motors and the pressure it's been under. Not just that, we also take a look at the IT sector ahead of earnings next week. I'm Reema Tendulkar, and with me are the boys Anuj, Nimesh and Nigel. Hi guys, notwithstanding the correction or profit booking that we had on Friday, this has still been a fantastic week for our markets.
Oh, absolutely, and Friday there was so much fall, but absolutely no panic at all, nothing. I mean, it didn't even look like, the market was falling. Yeah. And almost everyone that I spoke to passed it off, said that, it's nothing, just, weekly expiry on Sensex or just some profit taking, some Friday factor, whatever we want to call it. The market's been so stretched in terms of its moving averages and all. I was looking at the chart a couple of days back that how far stretched the Nifty is even to its 10-day moving average. Forget about 20, 50 and 200. So maybe a reality check was needed and we got that on Friday, but still the market has been absolutely strong.
Some of the data points that were coming in there, they were getting too cute, right, for comfort. You have the PCR at 1.5, you have the FIs, the net long positions at more than a lakh odd. They're buying in the cash market as well. So some kind of sanity, I think, par for the course, right? A small pullback at the end of the week.
It was coming, right? I mean, it was like for 8 days running, we've been, gaining every day 100 points on Nifty. It's not like, you can do this every day, right? So I guess, as you rightly pointed out, a bit of profit booking, a bit of sanity, so to speak. But again, from a overall market perspective, I'm not hearing that there is panic selling or people are just like, are just trying to cash out or whatever. There is a bit of caution out there. It's needed also. I guess this Friday correction, what we saw is relatively healthy as well, because it'll just, improve the breadth of the market as well. There'll be a bit of sanity as well. So that said, there is no panic, so to speak, from the larger FIs or from the DIs as well.
Absolutely. In fact, let me now go through the market setup and how it's looking, because it was a strong week, though spoiled by the close on Friday. Despite Friday's big fall, we actually ended the week with gains, and we had before Friday's fall about 8 days of gains, and normal for market to fall after 8 days of rally. Now, how the market is set up is very interesting, because 19,300 is where all the stop losses are, and the Nifty managed to close just above that. If that is triggered, then my sense is that you might see a correction which can take the Nifty to 10-day or 20-day exponential moving average. Just to put things in perspective once again, the 10-day moving average is placed at 19,200 and 20 days placed at 19,000. It's perfectly okay for the market to test these and bounce back even when the market is in uptrend. So absolutely nothing wrong with the market. Some of the big themes that played out this week. The biggest theme, of course, is something that Nigel will discuss in detail, but I'll just mention Hero MotoCorp was up 8% and Eicher Motors was down 11%. This week was all about the competition in the 350cc and above motorcycle space, and you saw that play out in the market. But other auto stocks, M&M hit all-time high, Tata Motors hit all-time high, Maruti finally a 5-digit stock crossing 10,000, hitting all-time high. So that was clearly the big talking point. The other big talking point was, and I had Samir Arora in my show come and talk about it, oil marketing companies, massive rally in oil marketing companies. This could be one of the best quarters. I think Nimesh will refer to that. ITC hit fresh all-time high, big rally in Z Group stocks. That is something that we saw. And last but not the least, blockbuster listing of Idea Forge tells you that the market is hot and how the way it picked up. But that's for this week in terms of what the big themes were. From the dealing rooms, Nimesh, what's the kind of feedback that you picked up?
Anuj, at record highs, the obvious question that everybody is asking me, and I've been trying to find out from the larger investors as well, are there any signs of market picking out? Is there enough euphoria in the market? Should one be cautious? I've been asking this to many of the investors as well. The broader answer is no. If there is no euphoria, so to speak, or like markets are at crazy levels, or something very unusual is happening for larger investors to get cautious. Yes, there is a bit of caution, but there is no panic or there is no big reason to sell out or cash out. But the other way, the other interesting aspect is, or the feedback is, the cash levels have a lot of people have raised the cash levels in the last 1 month, and that is hurting now to a lot of investors and the PMS investors as well, because you've been sitting on cash for last 1 month now, and markets are going up every day. So I get so many calls and all wherein there is a bit of left out feeling as well, so to speak. So this market has been very, very exciting for a lot of people, but there is a lot of left out as well among a lot of investors. So that's something we need to keep a track on. The other leg of the market which is helping the bulls is largely the FII flow. And again, for the last many days, deals or block deals or no block deals, the FIs have been net buyers in the cash market. One of their explanation is maybe there is a lot of rotation happening in the emerging market, and a lot of money is moving out of other countries into India, and that's helping at the margin, some of the Indian companies as well. I guess at record levels, the key to watch would be, my sense is the breadth will become narrower and narrower, and only few stocks will rally from here. So there will be a lot of frustration as well, as we reach further highs. The broader market may not do well, so you have to be very selective in the broader markets. But the overall feedback is there are no signs of euphoria yet, and I guess a lot of cash calls are hurting a lot of investors.
Okay, no signs of euphoria when we go up, and there's no sign of panic when we're going down. But Nigel, this week was all about the battle royale in the two-wheeler space. The competition is heating up.
Well, personally, I'm very happy. I have more choice.
A lot of choice.
A lot of choice. But, and it's going to be quite interesting. In fact, my wife asked me, Nigel, which one are you going to buy? So I said, maybe I'll think of one of them. But she said, will you be selling the Enfield? I said, no. So, that's the kind of recall or callback that Royal Enfield has. So, it'll be quite interesting. But let's focus on a couple of data points out here. Well, let's focus first on, the big theme. Will the challengers be successful this time around? Remember, the Royal Enfield has been very, very successful in the past. But this time around, there's a challenge coming up for them. In terms of market capitalization loss, well, you have Eicher Motors that lost close to 10,000 crores of market cap. And the other two, they gain considerably. Well, just to break up the market for you first, the total market size is close to around 1.6 crore, in the two-wheeler space. And out of the total 1.6 crore, 65% are motorbike. Now, out of that 65%, 8% is accounted for in the 250cc plus, and that's the segment that's now seeing heightened competition. Well, moving on if you're looking at a couple of more data points, in the last year itself, that's FY23, you have close to around 834,000 units that were sold. Now, out of that, Royal Enfield, they have the dominant share, 88% of the market out there. Now, here comes the challenge, because the pricing was announced in the past week, and you're getting two beautiful bikes, the Triumph Speed 400 as well as the Harley X440. Well, they were priced, and they were priced very, very attractively. You're talking about a good product coming in at a very, very good price. And who does it put pressure on? Well, three big bikes had come in from the Royal Enfield. That's the Classic, the Meteor, as well as the Himalayan. All of them in that range of around 350 to around 411cc. And the problem is these new bikes are only at a 10% premium to the Royal Enfield. Now, will the Royal Enfield be under pressure? And what are the four big factors that we're looking at? One is the three big brands that we just pointed out for. They account for 55% of its total sales in the past fiscal year. Now, the market share that they hold is close to around 90%. That could come under threat. Kotak, well, they came out of the know, they believe that the market share comes down to around 75%. The pricing, well, the pricing has been quite decent, but now will they have to cut prices to make sure that their product is competitive? That's point number one. And the gross margins they enjoy is close to around 43%, which is 75,000 rupees per vehicle. So will both these two come under pressure? And finally, if someone is looking to upgrade their bike from the 350cc, well, you've got two very good options that are coming in from the Triumph as well as the Harley. So those are the factors that could play against Royal Enfield. What works for Bajaj as well as Hero MotoCorp? Well, they're getting an entry into the premium motorcycles business with a very, very formidable global partner. And also valuation-wise, well, things are in their favor. Remember, the Royal Enfield or the Eicher Motors stock has traded a premium of mid-20s or even more. The 5-year average comes out for you. Now, post this correction, it trades at around 21 times. So that gap between the Eicher Motors stock as well as Bajaj and Hero MotoCorp, that's narrowed a little bit. Some would say that Eicher Motors now has come to a most attractive level you've seen in the last few years. So will it see some buying interest? But what do you track from here on? Ramp up of volumes are going to be very, very important on both these two new bikes. The introductory pricing is looking good, but will they have to hike prices at some point of time? And in turn, will that affect volume? So that's the other point that we're looking at. And finally, well, various brokerages believe they won't make too much of margins on the sales out here. So those are the top points out there. The big question is, will the challengers be successful this time? And will the Royal Enfield get knocked out? Time will tell.
Okay. I have booked mine.
Which one?
Harley. You know what? It's like something that you always wanted to do but was out of the pocket. But now that, it's affordable, so I've gone ahead and booked my Harley. And,
Wow.
I mean...
You've already booked or you're going to book?
I booked.
And what's the waiting period?
I've been told that I'll get it in the first batch, so I don't know.
That's a dream come true, Anuj.
Exactly.
That's a dream come true. When we were growing up, you only looked at the Royal Enfield. I mean, personally, you have a few ambitions in life. And for me, when I took my first job, I said, I've got enough down payment to make for the Royal Enfield.
This is what I say. I mean, it's okay, you invest in life and you should always do, but once in a while, you should do that. When I got my bonus, for example, a few years back, I bought a car that I always wanted to buy. So, these are things which you should always enjoy in life.
Invest in life and also live your life,
absolutely,
right?
live your life as well. But let's do one thing. We spoke about the fact that the focus now will be on the earnings season. So Nimesh has done a very interesting ahead of the curve analysis on what are the sectors where you should expect blockbuster earnings and which are the sectors where you could expect some tepid earnings. Nimesh, why don't you take us through the list?
So, Anuj, as you rightly pointed out, at record high levels, earnings season is coming in. It's going to be a very interesting quarter across many sectors and many companies as well. On the aggregate, just put to aggregate numbers first. For Sensex, the Nifty growth estimate is around 18% YOY, but an 8% decline on a quarter-on-quarter basis. Similarly, for Nifty, it's going to be 25% net profit growth YOY, but again, an 8% decline there as well. In terms of sectors which can actually drive the earnings for this quarter, it's going to be banks and autos on the upside, and which can drag the earnings could be metals and cements. That's an overall picture. Now, coming to the individual sectors, that's going to be very interesting. Personally, I'll be watching out for OMCs very, very closely. The expectation is this is going to be a blockbuster quarter for most of the OMCs, largely on back of the elevated marketing margins. Remember, crude is still, they're still selling in retail levels at 105 rupees. So that's going to be a big earnings quarter to watch out for. The second big sector to watch will be the banks. Within the banks, the consensus is that you'll see probably a NIM compression of 10 to 20 basis points, to some extent 30 basis points as well. So that's something for the banking sector. For autos, it's going to be a very strong quarter is what the street is expecting, and there's going to be a margin expansion as well for most of the companies. So autos could do well this quarter. For cement, the volume share is going to be quite strong, but again the margins could be quite flat for most of the cement companies in this quarter. So that's something as far as cement is concerned. For consumer durables, the feedback is going to be a very weak quarter across the board for most of the companies. One exception there could be Trent. They can see a bit of a surprise there, so that's something to watch out for. For NBFCs, is similar to what I spoke about banks. The compression in NIMs is going to be a very important thing to track for most of the NBFCs as well. Gas utilities could again be a very interesting sector to track. Like I said about for OMCs, even for gas utilities, this could be a big quarter in terms of margin surprises for most of the companies. So that's something to track. For metals and within metals, especially for steel, the consensus is that maybe one need to estimate at least 2,000 rupees per ton of decline on a quarter-on-quarter basis in terms of margins in quarter one. Specialty chemicals, that is one sector to watch out for. Across the board, the feedback is going to be a very, very weak quarter. So again, a lot of the companies are at record multiples. So that's something to track as far as specialty chemical is concerned. And last but not the least is IT. Rima has extensively covered it. But in one line, it's a seasonally strong quarter for most of the IT names, but it's going to be quite different this time. So you probably see some bit of shakeouts in the large cap IT names as well when the numbers are reported. So it's going to be mixed. But as I said, Anuj, the big sectors to watch will be OMCs, gas utilities, and to some extent autos as well.
Okay, that's the big picture. We'll slip into a very short break. On the other side, we'll dive deeper into the IT sector, which starts reporting numbers next week. And we'll also discuss markets with Andrew Holland of Avendus Capital. Stay tuned.